following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for unusual options activity alerts, advanced trading strategies, cutting-edge education, detailed market updates, and breaking customer activity. It's time for the One Option Show to rule them all. It's time for the Option Block with your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from OptionPit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Griegas from Options Express.
Welcome back to the Options Insider Radio Network and our live content, live coverage from the Futures Industry Expo here in Chicago. And what we have now actually is a first for us on the Option Block panel. I know a lot of you have been listening to the show and enjoying it and streaming it from our site and downloading it, but we have always done it remotely. We've always been in separate locations. This is the first time we've gotten at least the bulk of the panelists together in one room for a little bit of friendly debate and shouting, and no wrestling this time. So Mike and Tim, you guys cut that out. But I am joined in person, finally, by Mike Tusaw. Mike, good to see you.
Good to see you, too.
And, of course, Tim Navabi from Options Express. Tim, good to see you.
Nice to meet you, Mark. Thank you very much. See you, actually.
Yeah, I guess meet is appropriate because we haven't actually met in person, just over the old airwaves.
The Trading Block.
Well, it's been an interesting day for a lot of us. I know I've been trapped in this radio room here at the conference with very little access to the outside world. So my screens are not going. I don't have my live vol in here, which ironically we just had the live vol guys on the show, and I don't have their product running right now. So I think they would be upset at me for that. But yeah, I know it's an interesting day, if not a kind of a quiet day. Everyone's kind of playing the wait and see game, waiting for FOMC and the QE2 stuff to come out later. I think we got about an hour before that comes out now. We're recording this around 12:30 Central Time here in Chicago. So obviously the big news coming into today was the results of yesterday's election, and I hope everyone went out there and did their civic duty for God and country yesterday. It wasn't maybe the result a lot of people had been looking for. I know we've talked a lot on the show about what would happen if they got the full sweep that they intended, if they didn't get it. And it turns out that's exactly what happened. They didn't. The Republicans did not get the full sweep. They didn't take back the Senate. So it's kind of interesting to see. We kind of debated how that would play out. Looks like it's playing out kind of like we thought, which is market down a little bit, but not much. Maybe FOMC is we're still waiting for that reaction. But what's your guys' take on what happened yesterday?
I think the big event of what we're going to see is going to be happening today in 40 minutes or whatever it is with the FOMC announcement or what the FOMC comes out. The elections, I don't think anyone was really thinking that the Republicans were going to take the Senate also. The House, there weren't too many surprises in it. With the close races in Nevada, the Democrats were able to maintain in Nevada. But I don't think there was too many surprises with it, so I don't think the market's just utterly shocked by anything.
It seemed like early on that was the case, but then as, the kind of pro-Republican or whatever, just the inertia kept growing. I heard a lot of people starting to echo, oh, they're going to take the Senate too, they're going to take the Senate too. So it seemed like there was at least a groundswell of some opinion leaning towards that way. It might have been, some ebullient Tea Party people, I don't know. But some people out there were expecting a Senate sweep. What were you thinking there, Tim?
It was real difficult to tell. I think no one really knew the answer. I think there were a lot of people trying to guess the answer on what the outcome would be. But it was just too close to call, I think, for a majority of the races. So it was a primarily wait-and-see sort of event. I also sensed that just by some of the activity in the markets, just that volume seemed to really fall down, really come down. And I think that's just from people really sort of, not wanting to put any major bet in one direction or the other. So I think there was some of that, and in addition to the Fed, that people are sort of taking a wait-and-see attitude.
Yes. That's the big news. I think that's going to do something one way or another, but you never know.
The ridiculous QE2, and we talked earlier about how terrible that acronym is, and it still bothers me. I still think of the ship whenever I hear that one.
Huey, Dewey, and QE.
It's like, why is the ship so important?
I think that people still kind of have that same mentality of kind of wait and see. It doesn't really seem that volume is moving in one direction or the other, or that there's any serious bets one way or the other. So again, I think we have another wait and see event.
So before you came down here today, no serious flurry of calls on lighting up the OX board today?
No, not at all.
Well, I know, Mike, before we started talking, you're kind of our resident commodity guy, at least when John's not around. Of course, Tim, you do some commodity stuff these days, too. But I know you mentioned before that gold and silver both finally easing off a little bit after their long gallop north. What's going on out there in gold and silver land?
Well, I'm still I think the QE2 is also going to play a role in gold and silver in one way or another. Perhaps today, and I'm kind of like you, I've been kind of in a cave all day, haven't had a chance to really look at a lot of things in the marketplace thus far, but I think that I just saw the quotes on gold and silver. They were both down a couple percentage points at the time that I left to come over here, and I think that QE2 not only is going to have an effect on the marketplace, I think it's also going to have an effect on gold and silver. Now, if I knew which way it was going to have the effect on it, then, well, quite frankly, I wouldn't be sitting here right now.
So you don't have your crystal ball ready to go for the gold and silver markets these days?
You know what? I think Sebastian stole it from me. He probably has it.
Yeah, and for our listeners who are wondering where our tinny-voiced compatriot is today, he couldn't make it for whatever reason. He's running around. He might be lost in the hotel right now. It is a very large hotel. I think I hear a very tinny voice in the background shouting our name somewhere. So maybe he'll make it in somewhere mid-session, though I'm not holding my breath. So yeah, a lot of wait and see today in the old trading block. So I think with that, we're going to dive right into the odd block.
The odd block.
And welcome to the Odd Block. This is the section of the show where we discuss some of the interesting and or unusual options activity that we're seeing coming across the tape right now. Like I said, today has kind of been an interesting one for me to watch the screens. Luckily, I have the old optionsinsider.com to rely upon on days like these, where I could just surf on over to the site and see what our users are interested in and what we're actually putting up on the site today. And actually some interesting ones, actually courtesy of our friends over at Options Express, who do a lot of unusual activity reviews for us on the site. And today we're going to start off with Leg Mason LM, and they're up about $1 today to 32.27. And we're seeing a noticeable uptick in options activity on LM as well right now. Total of about 6 times their average daily volume, 6,000 calls, 49 puts. So that'll tell you
somebody's bullish.
Yeah, where the bias is on this one. Ironically, a lot of it focused on Jan 2012, so far off ones, on the 30 strike. About 5,000 of those 6,000 calls were the Jan 30s. And a block of about 1,500 went up at one time for $6.70. People actually lifting offers out there on these Jan 30s, the Jan 12 30s. And it's an opening buyer, so a lot of bulls coming in. Ds 31s and Ds 35s also seeing interest. Ironically, there's not really any news. This isn't an earnings play because you're buying Jan 2012s, so you're not exactly looking at a front month pop here, as well as the Ds. And some of the other names we've talked about recently, we've seen people actually playing earnings by going out to Jan sometimes just because, not Jan 2012, but Jan because it's just a cheaper vol play than it was for maybe November. November had a bit of a run-up. But in this one, yeah, there's not really any news driving this that I could see. Shares are in the middle of about a 3-day rally up to the 5% up to the north. And so the call buyers might be looking for an extension of this. I'm not sure if any of you guys play around or watch Leg Mason at all. Not exactly a big name out there, but one of the ones we like to pull up sometimes because they are small, and that's where you get some of the interesting players happening out there.
There's one thing that I'm thinking of, maybe some that could contribute to some of the unusual activity today, and it may not necessarily be Legg Mason. This is just kind of a theory of mine that I just thought of just a moment ago. But
those are the best kinds of theories, the spontaneous ones.
It is, and so I was just thinking that perhaps with the election results, perhaps some type of a politician might be connected to some type of a company, and then in one way or another, whether they do business with the company, whether they have ownership in it, and then perhaps when a politician wins office and gets power, it might be a reason to get bullish on that company.
So a senator sits on the board of Legg Mason, perhaps, or
I know nothing about Legg Mason.
That would be an intriguing. You heard it here first. Mike Tusaw alleging insider trading from the Senate in Legg Mason. So take that for what it's worth. Yeah. Then moving on to some of the bearish activity we're seeing, we saw another little name, EDG Resources, or actually EOG Resources, I'm sorry, ticker EOG, and they're coming up on earnings pretty soon, and they dropped about almost $2 yesterday to 97.74, and we saw some bearish players coming out to play in EOG. We saw the NOV 90.95 put spread going up for $1.35 1,500 times, so they bought 1,500 of the NOV 95 puts for $2.21. They sold 1,500 of the NOV 90 puts for 85 cents. Obviously that's a bearish play on this name. I don't have the total volume numbers available offhand to see how this plays up against their average daily volume, but looks like it's a relatively sizable play for a relatively thin name like EOG, and obviously people coming in to think that earnings are not going to go the way a lot of people expect. And going on, we mentioned a little bit about gold and silver before. There was some activity in one of our interesting names, the Market Vectors Junior Gold Miner ETF, ticker symbol GDXJ. Tim, I know that's one of your favorites, and it's a mining fund. Actually, it holds shares in a lot of different mining names like Newmont and Barrick Gold, and it's hit a 52-week high recently, and it finished up about 50 cents yesterday to 36.76 after the rally in gold, contributing to a lot of that actually. And so we saw a lot of people coming out to play for an actual pullback in gold right now. We saw the D36 puts in GDXJ really popping up on the radar with 10,000 contracts going up. The bulk of that went up in a block of 7,200 contracts for $1.60, and this was a new opening buyer. So someone obviously sizably bearish in this gold ETF or this mining ETF. And he's looking for a break even somewhere around 34.60, so a little bit south of where we are now, about 6% below current levels. Mike and Tim, I know you're both into the gold and kind of mining sector, so what do you think about a bear coming to play in mining right now?
Not surprising. I mean, if there's something to where the bear has an opinion on the stocks themselves or with what's going on with it, you could combo that with maybe this person believes that gold is going to have a little bit of a pullback finally, and combine that with perhaps a pullback in the stock market and with perhaps the stocks themselves. Triple whammy is maybe what that bear is thinking.
I know your position right now pretty long for gold and silver still, right? For a lot of your clients.
For the long term, yeah. We're long-term bullish, short-term cautious. So we try and hedge everything not everything, but a lot of things we are very hedged on. And with the collars that we're in on it, we might have some opportunities to make some downside adjustments, which we'll talk about a little bit later.
Yes. The good old collars. Today's the day for discussing collars. Tim, what do you think about the bears coming out to play in the mining sector right now?
Well, I know that the GDXJ has an older brother of the GDX. The GDXJ, what I understood about it was that it primarily has a majority of smaller cap mining companies composing that GDXJ.
Yeah, names like Newmont, Barrick Gold, a few smaller mining names, yeah.
Right, so that has been one of the more aggressive gold mining plays. And I think, any sort of dip in gold or any sort of, thought that there will be a dip in gold, you're probably going to see the GDXJ trading lower than most of its other, gold counterparts because it's more aggressive.
I kind of want to hit on then what some of the OX customers are doing in the gold, but I think we might as well do that in the express/spread block. So with that, I think we're going to wrap up today's abbreviated mining odd block, and we're going to roll right into the express/spread block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome to the Express/Spread Block. This is the section of the show where we sit back and we let Tim regale us with all the fun stuff going on at Options Express. This is actually where we kind of dig into some of the unusual activity, maybe, or interesting activity that is going on in the OX customer boards, as well as discuss some of the frequent questions and inquiries you're receiving from your users right now. So, Tim, I know you've been down here a lot today, so you haven't been dealing with the customers much of the day, but what's been lighting up your tape over at OX for the last couple of days?
Well, for the last couple of days, it has been primarily people offsetting their positions. People who were playing volatility in gold, some in oil, some in the currencies. They've basically been sort of lightening up the last 2 days, 3 days, for the results of yesterday and today. So primarily it's been mostly people, sort of scaling down their positions. Not too many people, like I said before, getting into something new. People are calling up though, and they want to know how to play volatility if it were to show up all of a sudden, in gold, in oil, in the currencies, and our customers are primarily retail customers. They have some very good, solid knowledge of options, but at the same time, they do need some help on strategies and things like that. So, a lot of them are really interested in knowing what are some of the limited risk type positions that they can take, and still sort of try to capture some of the volatility.
We were just talking about bears in the commodities. I know we've talked a lot about commodities and a lot of actual interest from OX players in the commodities lately. Are you seeing any leaning towards the bullish or bearish side of that? Are you seeing maybe some put speculators starting to show up, and maybe some of the mining names or some of the gold names?
Not at all. If anything, I mean, in the gold, yeah, exactly. In the gold or in the mining, there might be some of that. Some of the ones that have really sort of taken off. But primarily, people, are still bullish on commodities. They're using ETFs, or they're using the commodity futures themselves, or even the options themselves. Some of the most active commodities over the last couple of weeks has been the grain markets. As I mentioned before, some of the soft markets are, very exciting. So in those, specifically the softs, they're not bearish at all. I mean, they're looking now for a way to get back in, or just a way to get in, That's really where a lot of the interest lies right now in commodities.
I'm always fascinated to hear you or John or Rob discuss how much interest there is from the OX customers in the commodities. I mean, most people think of you guys, they think primarily equity index options. What percentage of your day, what percentage of your call volume would you say is devoted to the commodities these days?
I would say it's about 40%.
Wow, that's enormous.
30 and 40%, yeah. I mean, and that's where it is now. I mean, it didn't start that way. It started a lot, over the last year, 2 years with, options and, options on equities and stocks and things like that. But I would say probably over the last 6 months, last 12 months, I mean, our interest in commodities really has grown.
A couple years ago, when oil was having its heyday up in the 140 level, what percentage would you say were oil phone calls back at that time?
Back at that time, I would say that was about 20%.
Okay.
So you're seeing a substantial uptick even now, even though oil is well off its highs. That's interesting because, like I said, most people, I think, at their first blush, don't think of OX as the cotton / gold / oil place to play.
There's sugar now. Sugar is in a very...
You are a very sweet guy, Tim, I know, so that's probably why they're coming for
strong
you.
Market. Coffee. There's a lot of interest in sugar, coffee, cotton. People will call up. They'll know that we trade futures, and they'll say, how can I participate in some of these?
My buddies over the CME will be upset at me if I don't ask. What percentage of this would you say is ETF versus futures options on this?
They are primarily doing options on the futures themselves. The options on the commodities, I have mentioned a couple before. Those are still real small. There's really not a lot of participation there, but there still is some gaining interest there. And like I said before, people that want to participate in the commodity markets, they will be ready with a commodity futures account.
Okay, then with that, we will close out the express / spread block, and we will move right into the strategy block.
The strategy block.
All right, and welcome to the strategy block. This is the section of the show where we all kind of sit around the campfire and listen to good old Uncle Mike regale us with stories of yesteryear. And occasionally he throws in a strategy or two as well. And Mike, I know we were chatting a little bit before the show today, and it seems like today is just the day for collars. I was talking about collars with the OIC guys earlier today, and they have updated their collar study to include data from this year. And I know we've talked about collars a bit in the past, but it definitely seems like a topic that's worth revisiting, just given the amount of interest in that strategy from all different sectors of the option market.
Yeah, I think it is. And the collar, we do all sorts of variations of the collar with our long-term clients. And different times call for different types of collars, I really believe. And we've discussed it a little bit on the last show. But I think right now, if we do get a pullback in the market, then I think now would be a time to start putting to use the puts that are on a lot of collars. Gold, for example, we're collared in a lot of our discretionary accounts on GLD. And so with that, our put it's still going to be a few more dollars before it hits our put strike price that we have. But let's just say theoretically that GLD, I believe it was at around 130 last I looked, but let's say theoretically GLD were to go down to 110. Now, if that's the case, there's going to be a lot of sad gold people, but let's just say theoretically that it did. Even if gold did go down to 110 tomorrow, let's say that something crazy happened, and it would be I'd still very likely still be a long-term bull on gold. And with that, one thing that we can do on our GLD collars is we can sell the puts for a profit. Obviously, you're still going to be in a losing position overall, but nonetheless, one thing
the pain will be a little bit less.
Right, it would be. And you can sell the puts for a profit and then maybe buy to close the covered call for a nickel, let's say. Now, I don't know, I'm making up numbers. But then the point is...
We will hold you to those numbers, by the way.
The guarantee of a nickel, so to speak. But if it's less than a nickel in that Options Express, it's a lower commission.
There we go.
So that's a good thing. But with that, what we can do is we can take those profits, and as a long-term bull on gold, we can buy more shares of GLD with that money. The old adage of dollar cost averaging into the market. If I had a 22-year-old client fresh out of college, I would probably be a very big adamant of, or very excited proponent, there we go, on just dollar cost averaging into the market, assuming he has no money and just wants to invest for the long term. Put X amount of dollars into your 401k month in, month out. When the market's down, you'll end up buying more shares. As the market's higher, then you'll benefit from that with the shares you have. What the collar enables you to do is dollar cost average into the market, but let the market pay for it with the profits that you take on the puts. And it's one to where when you get a pullback, it can be of pretty good benefit to you. Now, of course, the disadvantage is that as the market goes higher, you have to adjust the covered call, you have to roll out. Yeah, there's a whole variety of things you can do with it, but the thing that we like about it is that we can look a client in the eye and say it's mathematically impossible for you to lose more than X amount of dollars.
I think too, that's where the value added of something like a Know Your Options or just going to an advisor who knows options in general really comes into play, because we hear so often, and I discussed this with the OIC guys this morning, and I think it's also relevant in your case. We hear so often the notion that I don't have time to manage this. I don't have time to efficiently construct my collar to optimal efficiency and then roll the strikes every month and use it to maximize time decay. And that's something where obviously something like a Know Your Options would definitely be handy, because a lot of you people with a large portfolio, or your average customer maybe doesn't have the knowledge base, or if they do, often it's the time issue. And that's with a lot of financial advisors we see as well, who just don't get into the options market because of the hassles involved with something like a collar and rolling the strikes. But one of the things I wanted to mention too is, like I said, the OIC guys this morning, they had an update on their collar study, and we've discussed that on the show previously as well. It's a very interesting study for a lot of reasons. One of them is that it kind of shows the collar in a new light. Most people think of the collar as a very defensive, just a cheaper way to get downside protection overall. What it turns out is that the collar was actually not just competitive, it outperformed, owning the NASDAQ outright. If you did their collar strategy involves a 6-month put and a front month call, so they're maximizing time decay by constructing the collar in that sense, as opposed to everything being front month. So that passive strategy allowed them to outperform just on a risk-adjusted and a general return. People have been asking them, well, why don't you factor in the last year or year and a half so to the rally and then see how your study does? And it turns out even with that in, it still dramatically outperforms the underlying alone, not just in risk-adjusted basis where it blows the doors off of it, but also in an absolute return basis. Now, obviously, if you were that one savant who came in and picked the absolute bottom of the NASDAQ and you bought the underlying there, you don't need collars because you are obviously a genius.
You're the savant.
Exactly. You was in tune with the market. If you did it in that time frame, then obviously the naked underlying would outperform the collar, because the collar is not a purely bullish strategy. But it just shows that I think for a lot of people who are coming into this market for the first time, or maybe starting to learn about collars, it's a much more nuanced strategy than a lot of people thought it was, and it's much more effective over a broader range of scenarios than I think a lot of people assume that it would be, provided that you structure it correctly.
I agree. It's kind of like I think of it like if you watch the poker tournaments on TV, they always say Texas Hold'em. It takes minutes to learn, but a lifetime to master. And when you look at the basic structure of a collar, most people that have done any options education at all, they understand what a covered call is. And they also understand what a protective put is. And you put them together, it's fairly simple to show what a collar is. And if you just look at it that way, a lot of times from the simplistic collar approach, you'll say, I can lose $5 on the stock, but I can make $5. That's really not that exciting to me. When you and rightfully so, if that's all you're going to do with it. But if you're making the adjustments, if you're looking at things, if you're following the rules, such as on the Q collar strategy, it can be pretty exciting. And I actually haven't seen that information out yet today, Mark, but that's very exciting to me because we have a lot of clients in that exact strategy.
That would be a good one. Go check out the OIC institutional website. We'll probably have a link to it on the Options Insider as well. We always link to their new studies. And, I think it also hits home the point of so many people come to us and they're obsessed with the zero-cost collar. And, that I usually try to stress them getting away from that a little bit, because it usually is not optimal for what you're trying to do. If you're just focused on price and you're that price sensitive, maybe, but that usually involves having the put and the call in the same expiration month to get a zero-cost collar, usually front month. And when you're doing that, you're not optimizing your put purchase. And what the OIC showed is just by that 6-month put, just adding that one little touch to it and keeping the front month call every month really seemed to push their returns through the roof. Well, what about you, Tim? I'm curious, do you get a lot of calls these days for how to construct collars? A lot of interest over at OX in this kind of stuff?
We do, and we have something that's very unique, that you can actually enter an order as a collar trade. So on the actual order form, you can put in the stock that you want to buy, how many shares you want to buy. Then you'll enter the call that you want to sell and the put that you're looking to buy. And what's really unique about our platform is that it will price it all out for you, so that you can just put one price on the order and send it down. But yeah, I would say that is one of the more popular spreads and strategies that customers do place with us, and they really like how they can place it all on one order and have one price, and not have to really think too much about, okay, now which one am I going to sell, and did I do that? Did I put the order in on that call already or not? So they can see everything all on one order with one price, and they really like that.
Refresh my memory a little bit. A lot of our users, and myself included, whenever I use our Options Express account, you tend to use the Extend platform a lot. I'm sure you can do the collar on the website. Can you also do it through the Extend as well? Really?
Yeah,
that's
you can
fantastic.
do it on the Extend, and you could see it streaming on the Extend as well. So,
because that's I think a lot of our audience, they hang out on that Extend more than they hang out on the website these days. It definitely was a great addition for you guys in terms of real-time active desktop stuff. But yeah, I think it's always worth revisiting the collar, at least in my book, as just one of those strategies that kind of doesn't get its due very often. But obviously for guys like you, Mike, who are in the advisor realm, it's a crucial tool. And even for the broker side, on the retail side, I'd imagine you have a lot of walking people through how to set these things up. It's just one of those tools that is applicable, I think, to more scenarios than most people expect, and it just doesn't get its due. Whenever the OIC updates that study, I always like to bring it back up on the show, because it's just one of those interesting ones that I think makes people think a little bit. And that's what we like to do here on the strategy block with good old Uncle Mike.
Did you say think or stink?
Oh, well, we won't go down that road. Sebastian isn't here. We don't have to go blue today. We can keep we can keep it away from the explicit, and also no 80s references. I've had my fill of those from him for about 5 years now. All right, and with that, picking on the person who is not here, we will close out the strategy block, and we will move right into Around the Block.
Around the block.
And welcome to Around the Block. This is the section of the show where we discuss what's on the horizon right now. And obviously, in our last show, everyone was talking election. Now the election is done, and we're still kind of sitting around playing wait and see for FOMC in about 20 minutes or so, and what the decision will be on that quantitative easing. And so that seems to be dominating the horizon even more so than any earnings we have on the tape right now. But so obviously you guys are watching that right now. And what else aside from the obvious are you guys keeping an eye on right now?
Nothing in particular. That's going to be. I really believe that if we have something that's going to shape the market, I think that's something that definitely could be it. We have a lot coming up in the next couple of weeks with the holiday season in general. We have the day after Thanksgiving sales coming up. So I think the retailers are going to be looking to that. There might be some speculative plays going on as to see how the retail sector does this season.
Yeah, we're already starting to see those pop up. They're starting to extend that Black Friday earlier and earlier in the month. Earlier than ever this year, it seems like. So yeah,
it keeps getting earlier.
So yeah, retail definitely on the horizon. And what about you, Tim? What are you seeing? What are some of the OX people who are calling in these days? What are they keeping an eye on aside from the 800-pound gorilla in the room?
Mike took the words right out of my mouth. I was just going to say, coming into the holiday season, we are seeing a lot of people who are attracted to names like Amazon, like Best Buy, like some of the other retailers like Macy's, or there was some news not too long ago about the luxury goods and how they're back, and about how some of those stocks are seeing some strength. So those seem to be active at Options Express, with people calling up, primarily placing some long calls positions on those names.
Obviously we've talked a lot on this show, and you've said the OX customers are really still playing heavily in Apple, and we always like to have our little tech quota for the show. And you mentioned Apple earlier, and I was thinking, and we also discussed, I believe it was the last show or the show before, the earnings coming up for Sony and kind of what happened with Sony. And we've seen those numbers come out since, and it wasn't anything super surprising. But what I did hear the other day, which I thought was kind of interesting, I thought I'd just throw it out there as kind of a crazy what if, because it seemed pretty crazy to me anyway, is a lot of the talk these days is about Apple sitting on about 30 to 50 billion, I forgot exactly what the number is, in cash. So they have a lot of M&A capital if they want to start throwing it around. Apparently, some analysts somewhere, and we talked about our opinion of analysts on this show previously, but some analysts somewhere started throwing around the idea that there were some serious talks between Apple and Sony, where Apple would be actually acquiring Sony. That to me just it made no sense whatsoever. So I thought, as we're sitting here waiting for the big number to come out in a few minutes, I thought I'd just throw that out to you, what you guys thought. What the heck Apple would do with such a diverse...
Walkman or what?
Yeah, there we go. Well, since they just shut down the Walkman brand, I would be surprised if they brought that back. But yeah, you might see Apple TVs with Sony branding. I don't know. It seems like an odd fit to me. Maybe it makes more sense to you guys. I don't know.
I saw that on my reader coming in on the train, and I actually thought it was a joke. So I continued to read, and it wasn't until later throughout the day that I read that no, this I think was an article in the Wall Street, and yeah, I mean it definitely woke up a lot of people on the internet. I will say that. I don't know. I really have no idea where to go with something like that.
I can imagine the put activity will increase quite a bit on Apple should that deal go out. The other one I heard them sniffing around was Nintendo. They want to increase their gaming presence, I guess. That might actually make a little bit more sense in terms of their player in the handheld space, and that they don't make TVs and CD players and all the other diverse products that Sony does. But yeah, I just thought I would throw that one out there to see. And I got the reaction I kind of suspect. Yeah. But that's pretty much, I think, what we're watching right now. It's hard to really go on beyond FOMC at this point because that is kind of the big driver.
I do want to throw out, I don't normally give out trades for people to make, but I have one that I'm real excited about, and I'd recommend people doing it right now. Sell your pumpkin futures. Halloween is over. Go long Christmas tree futures.
Oh, there we go.
And then stay away from turkeys because they have no future right now.
How long have you been holding on to that?
Over a year. I've been waiting to do that one for 11 months now.
That's seasonal humor brought to you by Mike Tusaw of Know Your Options. At least someone could fill in the ridiculous joke quotient for today. Now that the Sebastian is not here to throw out.
And that's all I got. So we need him back now. I don't have any more material.
If for no other reason than to fill the bad joke quotient of the show. But yeah, I think that's going to wrap it up today for this kind of abbreviated first live in-person episode of the Option Block. And this was kind of fun, guys. I think we should do this more often. It's fun to, as opposed to staring at the computer screen, to actually stare at you guys in person. Not so much you two, but you, Tim, definitely. Nope. And we'll have to do it again when we get the whole crew in here. Maybe we'll bring some more of the OX guys on too, so it can be you and John and Rob. Yeah. We'll have a whole contingent, and then we can kind of get into all kinds of fun debates about what's going on over there.
Sure.
But yeah, that's going to wrap it up for this episode of the Option Block. As always, if you want to learn more about Uncle Mike's strategies, then surf on over to knowyouroptionsinc.com. Again, got to have the ink. You don't want to go to the Know Your Options. It's a very, very dark place. And Options Express, obviously, it's very easy to find. And if you want some personal help constructing your collars, as always, call Tim Navabi. Tell him Mark sent you, and he'll give you the special collar discount. And for us, obviously, you can always find the unusual activity information and the news and a lot of the other content that we discuss on this show over at theoptionsinsider.com. And we want to thank you guys for downloading and streaming the show as you have been over the past few months. And we're looking forward to more episodes and hopefully more live episodes coming up in the near future.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.